8 days. That's how long it takes for a house to sell in Perth's Leda suburb. Not 8 weeks, not 8 months, 8 days. And that's not an outlier. Across Australia right now, there are dozens of suburbs where properties are disappearing off the market in 2 weeks or less. So here's what most investors don't understand. Where property prices are selling fastest is where the money is actually moving. And it's where smart investors are positioning themselves for 2026. So I want you to stay tuned because I'm going to show you exactly which suburbs are selling the fastest and why investors should be paying attention. Later in this video, I'm going to reveal the specific suburbs where properties are selling in under 3 weeks. And I'm going to show you the exact patterns that make these suburbs different from anywhere else. We're talking about suburbs where 97% of properties turn over in under 30 days. We're talking about suburbs with buyers queuing to get in. And more importantly, we're talking about the data that explains why these suburbs are moving so fast. By the end, you'll understand where investors are actually making money in 2026 and what it looks like when a suburb enters a demand explosion. So welcome back to the channel. My name's Aaron. Today, we're talking about something that most property investors completely miss, and is probably the single best indicator of where money is actually flowing in real estate. Days on market. Specifically, we're talking about suburbs where properties are selling faster than they ever have. And the data coming through right now is extraordinary. Think about the normal property sale process. You list a property, maybe it sits on the market for 30 days, maybe 40 days, maybe 60 days. It takes time for the right buyer to come along. It takes time for inspections, for negotiations, for finance to be arranged. But what happens when that timeline compresses? What happens when a property gets 20 offers in the first week? What happens when homes are selling in 8 days instead of 30 or 40? That's not normal market activity. That's demand explosion. That's a suburb entering a completely different phase. And right now, that's happening across multiple suburbs simultaneously. And the pattern is crystal clear. Perth is selling properties faster than anywhere in Australia. 76% of Perth suburbs are seeing properties turn over within 2 weeks. Another 21% within a month. That means 97% of Perth suburbs are selling in under 30 days. Compare that to the rest of Australia. Sydney is still averaging around 35 to 55 days, depending on the suburb. Melbourne's similar. Brisbane is at 21 days average. But Perth, something is fundamentally different in Perth right now. And what's fascinating is that this isn't just one or two suburbs. This is a market-wide phenomenon. And it's not random. There are specific reasons why certain suburbs are moving while others aren't. And that's what we're going to explore today. Because here's the thing. When a suburb enters a phase where properties sell in days instead of months, it signals something deeper. It signals demand that far exceeds supply. It signals buyer desperation. It signals the kind of market conditions where smart investors can make extraordinary returns. But you've got to understand what's actually happening and why. So let me start by explaining what's actually driving this. Why are some suburbs selling so fast? There are 3 primary factors. First, affordability. Suburbs that are selling fastest tend to be relatively affordable compared to the surrounding areas. When you've got a suburb where median prices are significantly lower than neighboring suburbs, you attract more buyers. More buyers means more demand. More demand means faster sales. Second, connectivity and local quality. Suburbs selling fast aren't randomly distributed. They're suburbs with good transport links, proximity to employment, good schools, and established amenities. They're suburbs where buyers actually want to live, not just suburbs that are cheap. Third, housing shortage. And this one's the big one. Australia has a severe housing shortage. CoreLogic estimates were short approximately 550,000 dwellings nationally. When supply is constrained and demand is high, properties sell faster. Now, here's where things get really interesting for investors. When you've got a suburb with strong fundamentals, good location, good affordability, good amenities, combined with severe housing shortage, you've got explosive demand. And when you've got explosive demand, you get faster turnover. But there's something else happening too, and this is crucial. Some of the fastest selling suburbs also have extraordinarily low rental vacancy rates. Bayswater in Perth has a rental vacancy rate of 0.4%. That's practically zero. Ringwood in Melbourne is at 0.5%. Diamond Creek, 0.5% also. When you've got a suburb with a vacancy rate below 1%, that means there are virtually no rental properties available. Tenants are competing for housing. Rental prices are climbing. Landlords can raise rents without fear of losing tenants. And when you've got that kind of rental demand, property investors take notice. They know that low vacancy equals strong rental returns. So what happens? They start buying. And when investors start buying into a suburb where supply is already constrained, purchase demand accelerates. Days on market compress even further. This is the feedback loop that creates the fastest selling suburbs. Now, you've got normal owner-occupiers competing with investors for limited supply. Both groups are motivated to buy quickly. Both groups are putting offers on properties immediately. Both groups are driving up prices. Both groups are reducing days on the market. That's what's happening right now in suburbs like Leda in Perth. Properties are selling in 8 days because there's a queue of buyers, both investors and owner-occupiers competing for every single property that comes to market. Now, let me walk you through what's actually happening in Perth right now, because Perth is ground zero for this phenomenon. Leda is the standout. Median price $570,000. Average days on market, 8 days. In the past month alone, 90 houses were listed. That resulted in 241 interested buyers. That's a 27-to-1 buyer to property ratio. Think about what that means. For every house for sale, there are 27 buyers competing for it. In a market like that, how long do you think the property is going to stay available? Of course, it sells in 8 days. It probably could sell in 2 days if the seller wants you to accept the first offer. But Leda isn't the only suburb. Brookdale is second with 10 days on market. Median price, $500,000. Rental yield, 6%. Hillman and Darling Downs are at 12 days. The whole top end of Perth is selling extraordinarily fast. Now, here's what's fascinating. The median price in Leda is $570,000. That's affordable. Not inner city expensive. Not completely out of metro cheap. It's that sweet spot where owner-occupiers with equity in existing homes can move, and where investors with moderate deposit capacity can enter. It's also established suburban Perth. These aren't new developments miles from anything. Leda is west of Perth. Established infrastructure, established schools, established shops. It's where people actually want to live. Combine that with Perth's rental prices, vacancy rates under 2% across most suburbs, and you've created the perfect storm for fast sales. Every property that comes to market gets snapped up immediately. And here's what investors are realizing. Perth's not expensive. You can buy a house in Leda with strong rental fundamentals for $570,000. You can negatively gear it or achieve close to break even. And in a market where vacancy rates are under 1%, you know rental demand will sustain. That's why investors are flooding into Perth like Leda, Brookdale, Hillman. It's not speculation. It's based on fundamental supply-demand dynamics. Now, Perth's situation is unique because it's extreme. But Sydney has its own story, and it's equally important to understand. Normanhurst and Dean Park made Sydney's fast-selling list, both at 13 days on market. But what's interesting about these suburbs is that they're not affordable. Normanhurst median is $1.9 million. Dean Park is $925,000. These expensive suburbs, not cheap by any standard. So why are they selling so fast? It's because they're considered blue ribbon. Established suburbs where motivated buyers are prepared to pay premium prices for the location. These are suburbs where people have owned homes for decades. There's limited supply because homes don't turn over often. When one home comes on the market, there's immediate competition. This is very different from Perth's dynamics. In Perth, it's affordability combined with shortage, creating fast sales. In Sydney, it's scarcity of a specific product, premium blue ribbon suburbs, that's creating fast sales. The investors in these suburbs are different too. They're typically wealthier investors. They're not buying for strong cash flow. They're buying for capital growth in established, prestigious suburbs. But here's the point. Both situations, affordable suburbs in Perth and premium suburbs in Sydney, are telling you the exact same thing. Properties are selling fast because demand substantially exceeds supply. And when that happens, property values increase, not gradually over a long period, but noticeably over a short period. The suburbs where properties are selling fast right now are the suburbs where capital growth is most likely over the next 12 to 24 months, because that's what tight supply and high demand delivers: capital appreciation. Brisbane tells a different story again, and it's worth understanding. Brendale came in as the only Brisbane suburb to crack the top 15 fast selling list with 18 days on market. Median price $520,000. Rental yield 4.6%. Now, Brisbane averages 21 days on market across the city, so Brendale at 18 days is only slightly faster, but that still indicates strong demand. So, what's happening in Brendale? It's an affordable, established Brisbane suburb. It's got good schools, it's got proximity to the airport and motorway access. It's where young families with equity are moving. It's where first-time investors are entering the market. But here's what's different about Brisbane compared to Perth. In Brisbane, market tightness varies much more by suburb. Some suburbs are moving reasonably fast, others slower. There isn't the market-wide 16 to 18-day average that Perth is experiencing right now. This suggests that Brisbane doesn't have as severe a housing shortage as Perth. Demand is still there, but it's more localized. It's concentrated in specific suburbs like Brendale, not spread across the entire metropolitan area. So for investors, this means Brisbane requires more careful suburb selection. It's not enough just to buy in Brisbane. You need to buy in the right suburb where demand exceeds supply. You need to buy in suburbs like Brendale where properties move fast. But when you do find those pockets of high demand in Brisbane, you've got genuine investment opportunities because you know that strong demand means rental returns will follow. Now, here's something interesting that most investors don't realize. The fast-selling suburbs aren't uniformly distributed. They're heavily concentrated in particular cities and particular regions within cities. And that concentration tells you something important about where growth is actually happening. Perth demonstrates the fastest selling lists. 8 of the top 10 fastest selling suburbs in Australia are in Perth. And that's not a coincidence. That's not random distribution. Perth's housing shortage is acute. Jobs growth is strong. Population is growing rapidly. Rental demand is extreme. And affordability relative to the East Coast is significant. All of that combined creates the perfect conditions for fast-moving markets. Sydney has fast-selling suburbs, but they're predominantly high-paced, blue-ribbon areas. That's a different dynamic, but it's scarcity of premium products, not affordability-driven demand. Melbourne is moving a little slower than the other capitals, 45 to 50 days on average, which suggests the Melbourne market is less stretched. Supply is more adequate. Competition between buyers is a little less intense. Brisbane is in the middle. Some suburbs are moving fast, others are not. A mixed market with pockets of real demand. And Hobart, Adelaide, Darwin, these are experiencing their own dynamics driven by capital growth, migration, and local market factors. But here's what this tells us. If you're looking for a suburb where investors are actually making money, where demand is overwhelming, and where competition is intense, where prices are likely appreciating, you need to be looking at suburbs where days on market are compressing, not lengthening. The suburbs where the fastest turnovers are suburbs experiencing supply constraints. And supply constraints drive both rental yields and capital growth. Now, I want to add one more layer to this analysis because it changes how you think about fast-selling suburbs. The suburbs selling fastest often also have the lowest rental vacancy rates. This is really important because it means something fundamental about demand. Bayswater in Perth, 0.4% vacancy. That means essentially no rental properties are available. Every rental property that hits the market gets occupied immediately. Hillside in Melbourne, 0.4%, same situation. Ringwood in Melbourne, 0.5%. When you've got rental vacancy rates this low, it tells you two things. First, rental demand is extreme. There aren't enough properties to house all renters who want to live there. And second, rental prices are likely climbing. When there's virtually no vacancy, landlords can raise rents aggressively. Tenants will accept the high rent because alternatives just don't exist. And here's where this connects to investor decision making. When a suburb has both fast selling property markets and extremely low rental vacancy, that's a clear signal that the suburb is undersupplied. Not enough owner occupied housing, not enough rental housing, shortage across the board. In that environment, property prices should continue appreciating because investors can see the supply demand imbalance. Investors know that low vacancy means strong rental returns, so they keep buying it, which keeps prices supported. This is a mechanism that sustains fast-selling suburbs. It's not just a temporary blip. It's a response to real underlying supply constraints. So what does this all mean for someone actually trying to build an investment portfolio in 2026? Firstly, focus on suburbs where days on market are low. Suburbs where properties are turning over in 30 days or less, particularly under 20 days, are experiencing demand that exceeds supply. That's where fundamentals are the strongest. Second, cross-reference with rental vacancy data. If the suburb has fast-selling properties and low rental vacancy rates, that's a double signal. That's a suburb where both purchase and rental demand are strong. Third, don't just chase the fastest selling suburbs blindly. Understand why they're selling fast. Are they selling fast because they're affordable? Because they're premium and scarce? Because they're close to infrastructure? Because they've got good, strong job growth? Different drivers create different investment profiles. Affordability-driven suburbs might offer different returns than scarcity-driven suburbs. And fourth, recognize that the fastest selling suburbs today might not be the fastest tomorrow. Markets shift, new infrastructure opens, supply increases. The dynamics that created fast sales can change. So if you're looking for the current signals, not assuming they'll persist forever. But right now, in late 2025 and heading into 2026, the suburbs selling fastest are telling you where the demand is concentrated, and where demand is concentrated is where investors should be looking. If this has changed how you think about identifying investment opportunities, if understanding days on market and vacancy rates feels like a game changer for how you analyze suburbs, I want you to do something. First, hit the like button. When you do, it tells YouTube that this kind of data-driven analysis is valuable to Australian investors. Second, drop a comment below. Tell me which suburbs in your city are selling the fastest, what days on market in your area, or if you're interested in fast-moving suburbs. Tell me your experience. Are you seeing demand, vacancy rates tight? And if you're not subscribed, please subscribe now. We break down Australian property data weekly. Real data, real trends, real opportunities for investors who want to understand markets instead of guessing. Here's the reality though. Understanding that fast-selling suburbs represent strong fundamental demand is one thing. Actually identifying which fast-selling suburbs in your market are worth investing is different. Because you need to know the current days on market data, you need to access rental vacancy information, you need to understand pricing trends, you need to evaluate whether a suburb is fast selling because of temporary factors or genuine supply constraints. And you need to assess whether prices have already climbed too far. That's detailed market analysis. And most investors don't have access to reliable data or don't know how to interpret what they're seeing. That's exactly where we help our investors. We look at real-time data, real-time market data. We identify fast-moving suburbs in your area. We analyze what's driving demand, and we help you position your portfolio accordingly. If you want to understand exactly which fast-selling suburbs in your market represent genuine investment opportunities, not just properties turning over quickly, but suburbs with real growth potential, book a strategy call with our team. The link is in the description. We'll walk you through the data for your city and show you where smart investors should be focusing now. I hope you got a lot out of this video today and learned a lot. Thank you for watching.